What is up, YouTube? Welcome back to Stocks by the Numbers. I just want to apologize because I know I mentioned I was doing a move, so I had to pack everything up at that place, bring it over to this place, unpack everything. So I know I haven't come to you guys in a couple of weeks, but I appreciate the patience. And today I wanted to dive into a company that apparently made a big move today, and I'm a little upset because I wanted to talk about it about a week ago, and that's on me, but still worth keeping an eye on. Name of the company in question: Luminar Technologies, ticker symbol LAZR, listed here on the NASDAQ. Now, stock closed 704 today, down about 11% on the day. We have a 52-week low of 391, 52-week high of 1680, so we have quite a range here. This is our day chart. We pull up a 6-month chart, and you can see bouncing around, was double digits, pulled down. And we pull up a 1-year chart, and you can see just straight downtrend, really. If you back this thing out, from the time it came out, hit those highs, as you can see, well above $40, and just consistently has been selling off, right? And let's see if it's justified. So we have a market cap north of $2.5 billion. We have EPS consistently decreasing quarter over quarter. Last quarter they finally beat that out. And if we look at the revenues here, you can see 8 million, 12 million, 6.8, just under 10. And up to 12.8 million, right? So the last couple of quarters have been consistently increasing. Before that, little sporadic. However, you can see the net income drastically outweighing the revenue coming in. So last quarter, they brought in 12.8 million, lost 117.5 million. Obviously, net profit margin, minus 900%. So what we're seeing here is a company that is definitely bleeding on its balance sheet. And if we look at the numbers on the income statement, which I'll do in a second, you can see that the cost is outweighing the actual revenue that they're bringing in. So again, just looking at the last couple of quarters, you can see last quarter, nice beat there on the top and bottom lines. I believe they're posting earnings, they said February 27th, so inside of a couple of weeks. We'll keep an eye on this one. Analysts basically have an overall buy rating on this. I'm seeing price targets of $13, $14. However, in my opinion, I do think it's going to come down before it goes up. You know, here's the miss on the EPS side with the beat on the revenue side. Here's the big miss on both. And then before that, again, miss on the EPS side with a beat on the revenue side. So what we're seeing here is just a little bit of inconsistency. That's what we're seeing. I mean, I'm happy to see that the company is starting to bring in, 7, 8, tens of millions of dollars. Definitely a good sign for the company moving forward. However, these losses are drastic. For 2021, jumping up to 32 million. Year before was only about 14 million in revenue, right? So the company does have a few numbers that are trending in the right direction, but I just wanted to show here, as we can see, liabilities made a huge jump, going from about $250 million up to almost 700 million. However, the assets are outweighing the liabilities right now, which is a pretty good sign. If we look again quarterly, you can see just consistent decreases, even estimates moving forward here. Now this is saying March 16th. Okay, so in the next month or so, they're reporting earnings. But you can see just consistent decreases on the EPS side, even with the estimates coming in consistently decreasing. It does look like the revenue is more promising, as we see they're estimating about 12.5 million in this next upcoming quarter, but they just posted 12.8, and they're coming off 2 single-digit million reports with 12.3 before that. So I don't know, it's going to be hard. It's going to be hard to estimate right here if this company will come in with these revenue numbers. I mean, it is possible they can jump up to 13, 14 million and have a nice beat, but also based on the history and the volatility of these numbers, they can also come in, with 9 or 10 million and just miss that completely by a couple of million. But believe it or not, in the long run, I don't think it's going to make much of a difference. If we look at the cash flow, you can see the cash from operating activities consistently decreasing, going from 60 to 75 million, doubling to 148 million, now sitting at minus 187 million. The cash from investing activities has been increasing, though, climbing out of the negatives, was as low as minus 270 plus million, now sitting at about minus 110 million. Cash from financing activities bouncing around, obviously, was healthy in 20 and 21. has since dropped off a little bit to about 224 million, and obviously the cash flow is consistently decreasing with the losses that they're taking. And you can see, well, no, this is, well, you can see the debt also. I wanted to show the debt. As you can see, jumped up to about $250 million in 2019. They brought it back down in 20, and then in 2021, you can see it jumped all the way back up to north of 600 million. And it's showing a book value here of only 57 cents a share, with the stock still trading after a big down day north of $7 a share. So technically, on paper, the company can sell off, and it would be justified. Look at the revenue increasing from 14 million, as I said, up to 32 million in 2021. Right now, sitting at about 42 million. But look at the cost of goods, right? So the cost of goods sold seriously outweighing the revenue that they're bringing in from their software. Now, remember, this is a company, I know I just kind of move forward, but this is a company that is in the autonomous vehicle software sector, and they recently purchased a 3D mapping company. So they said that they're trying to do things like a little bit different than like a Tesla is with their autonomous driving. And I do know that about a year ago, Mercedes-Benz took a very tiny stake in the company and mentioned that they were going to start implementing their software moving forward. You know, they see a lot of upside potential with Luminar Technologies. So this company can, over the years, start to increase its revenue significantly. However, as of right now, in my opinion, I think the company is just significantly overvalued, bringing in 30-40 million for the year, sitting at a market cap of $2.5 billion. And they're losing, $1.50, $2 for every dollar that they're bringing in. As you can see in 2021, it was about a 2 to 3 ratio, with the cost outweighing the revenue. Here, you have a straight up 1 to 2 ratio, even above that really, but losing 93 million off of the 42 million that they're bringing in. Obviously, the profit being affected by that. Look at the operating income just consistently decreasing, going from minus 60, minus 94 million. Now it's up to minus 200 plus million, almost minus 400 million. And the operating expenses obviously increasing significantly year over year. But again, it's not all bad news, because the company is starting to grow its actual business and start to bring in revenue. And we looked at the earnings before. If they do beat those earnings, I think they'll be in decent shape. At least a more realistic valuation, if you will. Trading about 68 times sales, which is pretty high. Again, 34 times book value. We just looked at that. So that's why a sell-off, not only, in my opinion, is inevitable, but again, justified. Return on assets were climbing out of the negative realm, and then obviously pulled back, as we see here, to about minus 55%. The return on equity slightly increasing. The return on invested capital was increasing, then had a pullback. Same thing here with the gross margin percentage, as we can see, bouncing around minus 30, minus 79%, was minus 44%, now sitting minus 121%. Operating an EBITDA margin around minus 900%, along with the net margin percentage as well. So this company, almost like a DraftKings, which isn't really a fair comparison, because I know DraftKings is growing pretty rapidly, and I know they have some decent earnings reports here and there. However, it was one of the first companies that we looked at here on this channel, and I explained how they were, at the time, spending about $1.50 to make $1, which isn't a sustainable business model, right? You have to narrow that loss, and also eventually flip it positive for yourself. That's when the price of the stock really takes off. So right now, that's why in the short term, this company could be struggling, and we could see a serious pull-off here. Like I always say, pricing and timing. So why force ourselves here at 704, thinking we're getting it at a discount today with a minus 11% drop? However, why buy it at 704 when you might be able to buy it at 304 or potentially 204, right? Because even if we look here at these estimates, this is interesting, right? Because if we look here at 2021, coming off, a decent year for the company anyway, from where they came from, you can see estimates at minus 41 cents per share on the EPS side, and they posted minus 38 cents, right? Which isn't too bad. And that was off of 32 million. However, look at these forecasts moving forward. For 2022, estimates of minus 73 cents a share off 42 million in revenue, right? So they made more money than the year before. However, the loss per share almost doubled. And then we move to 2023, and you can see revenue making a massive jump. They're forecasting to 116 million, yet they're still going to lose 65 cents a share. 2024 revenue up to 365 million, still losing 43 cents a share. So in 2024 of 365 million, they will supposedly have a worse EPS than they did in 2021. And then, of course, if we move over to 2025, you can see estimates on the EPS side still minus 13 cents a share off of almost $750 million in revenue. So even if this was posted right now, again, with a $2.5 billion market cap, the company's trading about 3.5 times yearly revenue, which would be in line or potentially overvalued based on the profitability ratios that we looked at before on the company if we keep the current trends. And with the company still being EPS negative, that's why even with these numbers here in 2025, maybe you can say this stock currently would be fair valued at $7 a share. But with all of these years still ahead of them, and they're bringing in 40 million, these estimates again, 740 million, they have a lot of work to do, and it's going to take a lot of time for you to really start to see these numbers coming into the stock like this. That's why I really do think it's going to go down more before it goes up. We switch over here to stock charts. You can see the RSI was approaching 70, roughly the overbought benchmark used, and you can see big drop today again, dropping the RSI down to sub 56. We have our 200-day moving average here of 788, and you can see multiple breaks and then rejections off of that moving average, and that's exactly what happened today as well. And you can see the MACD starting to turn, but again, the stock has basically been raging since the ball dropped. And, I know in the short term it may look promising, but I do think it's going to pull back to that moving average of about 6 and change. And now, even on the daily, this is the weekly now, but looking at the daily and the weekly, the bottom Bollinger Bands were in the high 4s. Here you can see it's a 474. So in my opinion, again, you can see it's in this big downtrend for about the last 24 months straight. So in my opinion, I think this may potentially be the top, and you may see another pullback and have the stock take another leg lower, and even potentially make new 52-week lows here. So, a couple of things to keep an eye on, but overall, again, looking at the numbers, I like what the company is doing. They're in the software sector, not the hardware sector, which usually works out for a technology company in the long run. However, again, to remind you of AMD, revenues were increasing slowly, and the stock price was slowly climbing, even though it was still volatile. But what really made the stock price explode, if you remember, it was the fact that the company went net income positive. And that's what it always comes down to. So again, if you're in this company, you may want to weather the storm. You may want to consider adding some more shares on the next leg down. If you were looking to get into this company, again, not saying it's not a buy, but pricing and timing. So why buy at 704 when we could potentially get in, in mid to low 3s or 2s or potentially even lower? Of course, as I'm about to end the video, there's a fire truck going by. But anyway, I want to thank you guys for stopping by. Once again, Stocks by the Numbers. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Just like everyone on YouTube says, if you like the video, give it a thumbs up. If you like the content, please consider subscribing to the channel. And moving forward, like I always say, I understand that markets are rocky, they're volatile, and they're uncertain. So I wish everyone success. I hope everyone makes a couple of dollars. Don't sweat the small stuff. Stay sharp. Stay focused. Have a good day. I'll see you in the next one.